House to Home, presented by RE/MAX Diamond Realty.
House to Home is back, and I'm Jason alongside Liz from RE/MAX Diamond Realty Guam. Liz, I had Gina all to myself last week, and so you and I are going to talk about a really interesting topic this week, I was hoping. Fixer-uppers and how you actually finance them. And, some people see these as, a fun project, definitely a potentially viable revenue stream. So if you want to go about, acquiring the funding for a property that you would improve and hopefully try and put to market and everything, do you go through traditional bank loans?
Well, many of our investors buy fixer-uppers, and then what they normally do is they would fix it up, renovate it. Sometimes they turn it into rental properties, or they would turn around and flip the property and sell it at a profit.
Mm-hmm.
So we do get buyers who are interested in buying it, but they need to go get a loan. Now, the problem with that, it just depends. If the house is habitable, then there's no problem getting a loan. Because of course the bank would want to secure their interest in the property should there's a failure for some reason in the payment of the property. Then they need, if they foreclose on it, they want to make sure they insure the value of the property. So as a result, the house has to be habitable. Now, there are loan types out there that do allow for purchasing the property, and they would allow for renovation work. So it just depends on which bank you go to and what loan type you're getting. But there is a possibility that someone could get a loan. But again, it just depends on the bank and the type of loan associated with it.
Mm-hmm.
So for example, if someone were getting a portfolio loan, they could buy the property, and then that may not be a problem. But again, it's dependent on each individual bank on what their requirements are in terms of the condition. So I had a situation where someone came to me and said, "Hey, Liz, I need your help to determine a value of a property because I'm going to buy it from a relative." So I did I did a market analysis just to see what the value of the property is, if she's getting a deal on it. But then she was going to go get a loan. And I was explaining to her, if the house is not habitable, which it wasn't based on the pictures she was showing me, I said, you're going to have a difficult time trying to get a loan to finance that particular property.
Mm-hmm.
So she would have to try to get additional funding, another source for the renovation work. So bear in mind, the banks would also require the renovation work to be done before they close the sale of the property.
Therefore, mitigating the risk that they then take on. And yeah, that's what
right.
I was about to ask, because obviously it is a little bit of a bigger risk for the lender. But also, what are the terms, relative to how many years the person being given the money would have to pay back, and what's the APR on this and everything like that, given the fact that it's a higher risk?
Well, we're fortunate that our interest rates are really low right now. And that's why there's a run on the bank to get loans to finance homes. So a lot of the first-time home buyers are going into, this is a good time, but the problem we're having is the inventory right now. So we do have some developers that are trying to find means to produce lower cost in constructing a home, because what they do is they're trying to meet that need. Our construction costs are high, and it's difficult right now to get a home, sometimes price even within the 300 price range. If you're looking at a 250 to 300, sometimes that's difficult. And the homes that are in that price range are fixer-uppers. Mm-hmm. So again, it just depends on you can make a deal with the seller and say, hey, I want to buy this property, but we're going to need to work together to get it renovated before I can get my loan. Mm-hmm. So I've done some transactions in that regard where there's a negotiation done between the buyer and the seller to come up with a means to repair the home in order for it to close the transaction with the bank.
Are these the kinds of let's say people with vision, or people that are opportunistic, and they put those signs up in some what might consider to be awkward places around the island, but it says, will buy land for cash. And then it's got a loan and everything, because it is a straight cash transaction, and somebody obviously sees that there is value in that property and they want to take advantage of it.
Right, but a lot of those, I'm sure some of them, they want a deal. If they're going to buy your house for cash, they want to negotiate with you to get the best deal for them. So sometimes it's a negotiation process to try to get a deal that works for both sides. Bear in mind, as realtors, our objective is to be fair on both sides of the fence, to make sure if we're representing you, we're hopefully getting you the better deal. So, and also make sure it's within the market value.
So once again,
Otherwise,
being a
you're
realtor
either-
means being a savvy business person, means being an astute economist, also
That's
being like a
right.
goalie. You got to watch and make sure that, either soccer
Yes.
or
Yeah,
hockey,
Right. And, we don't pull numbers out of the air. When we do our market analysis, it's based factual. It's based on what properties have sold in the past and what properties are currently on the market and what is the competition. So that would help. And, normally it's all up to the appraiser when they do their valuations. Bottom line is, if you go to the bank, it'll be subject to the property appraising at the purchase price. Because if it appraises less, then you go back to the negotiating table to renegotiate that purchase price.
Okay, and now I must ask your professional opinion. In all the years you've been doing this and everything, for a novice, a newbie like me, if I was considering, acquiring a piece of property as a fixer-upper, would you recommend that I pursue getting like a loan for that, or should I consider other means of financing?
Well, the only thing right now is because there's limited inventory, you might be vying for a property that there's a cash buyer out there for it. So if you're going in for a loan and then you get a competitor that's paying cash sometimes wins. It just depends on the terms and conditions that we put into your contract. Now, if it's a property that I know over time will gain in market value, I would say, Jason, you got to go for it, and then we'll have to get creative to some degree about how to put in the improvements so it passes the muster with the bank.
All right. Well, there is a very fine line between creativity and stupidity. Like, I'm actually going to have that, that's my line from my high school yearbook and everything. But we always appreciate the time and the insight and the expertise, Liz. So travel safely, please. All right. We'll see you next week. Thanks for watching, everybody. Bye-bye.
See you next week.
Bye.
Bye.